insurance? Well, something you need to know about because as your business grows, there's a lot of kinds of insurance that you're going to have to make sure that it runs successfully and that you're protected. As a matter of fact, there's insurance like E&O insurance, errors and emissions insurance, which might even be required. I even have insurance required by affiliates that we work with before we can even work with them. There's just so many reasons you need to have insurance in your business, and business credit's a part of your ability to actually get it. So what you need to know is that business credit does not tend to be necessary to apply for a policy, meaning that you can't get an SBA loan without having established business credit because they use a score called FICO SBSS. And the way that FICO SBSS is, it weighs business credit heavier than anything else into the score. If you don't have business credit, you cannot mathematically have a score high enough to ever qualify for an SBA loan. But that's not the case for insurance. Insurance, you can get approved without having business credit established. But it is also shown that having an established business credit score and having good business credit profile score will help you pay a lower rate, pay lesser premiums than what you would pay if you didn't, including having an established paydex score with Dun & Bradstreet. So getting ready to apply for business insurance is like being prepared for financing, right? You need to know the details of your business and have your business set up where it's fundable and set up where it's credible before you even apply. So if you have to have certain kind of coverage, then understanding the required coverage is also going to be a key step for applying. So, of course, in insurance, you really want to do your due diligence on this. And we actually had somebody come in and talk about this on the podcast the other day. And it's interesting. He said, look, have you ever really looked through an insurance policy that you've been issued? I'm like, no, I don't think so. As embarrassing as it is to say, I don't think my health insurance, my life insurance, my car insurance, I really, have a lot of faith in my agents to do a pretty bad job of actually coming in and of actually paying attention to those policies. But it's one of the things you want to do. As a business owner, one of the first things you want to do is set up the business where it's credible and fundable. We're not going to talk a lot about fundability today, but if you go to youtube.com and search fundability, you're going to find plenty of training on that. You want to make sure your business is set up where it's fundable. You also really do want to take the time to make sure that you're really going through these actual policies. Make sure that it has the coverage that you want it to have, and make sure especially that you're looking at the exclusionary parts of these policies so you see what's excluded. Because again, what's happening is that there's more and more and more stuff that's put in there that needs to be excluded, that if you just say to the agent, hey, I don't want this to be excluded, then they can give you a different quote, a different policy that does. So looking at this and researching what's in the policy is as important to getting the policy as it is to make sure your fundability is set up. And by the way, if you're just coming in, tell me where you're from. I always love giving you a shout out. So make sure you chime in, tell me where you are tuning in from. Okay, so get ready before you apply. So part of due diligence is looking for an agent. So you've got to be working with an agent who understands your business needs. So I got to tell you, my agent at State Farm has been my agent at State Farm for 25 years of my life. They've helped me with personal insurance on cars, on homes. They've helped me with life insurance. They've helped me with my business insurance. When I started buying vehicles and different assets in different states, and then they got me insurance agents in those different states to help me. I've loved the relationship that I've had with my agent at State Farm. So that's what you want to have. You want to have somebody that you really love that relationship, because as you progress, as the business grows, like we have key man insurance, like we have insurance that, that help buy back my shares from my family if something happens to me. And then insurance that's, covers me and gives the company money if my demise comes about, so then they can replace my position. So these things are just natural. I mean, besides on the personal side, car insurance and homeowners insurance and life insurance, then on the business side, you've got key man insurance, you've got umbrella insurance policies, you've got, policies that will be there to, like I said, pay back the people if you have a partner, something happens to you, to buy back that stock. There's all kinds of these insurance policies you're going to need. And in order to be able to get them, you really want to work with somebody that understands you, understands your business, works with your industry, and can help you in all these different areas as your business grows. Now, data your insurance is used to revolve around correlation, and poor credit tends to be a higher risk because, look, the data shows a higher probability of frequent claims and overdue payments when insurance covers someone with bad credit. I don't make up this stuff, but that is the case. So the reality is, not having established business credit, having damaged business credit, having damaged consumer credit, 100% absolutely will take into account your consumer and your commercial credit quality. As a matter of fact, you really should look at your LexisNexis credit report. Okay, I went to get an insurance policy on a watch and I got denied. I'm like, that's absurd. Why would I get denied for insurance on a watch? I've never had a jewelry claim before. I've never had poor credit. So I went through and pushed through to an underwriter. Not easy to do, but I did it. By the way, people ask me, how do I get the underwriter on the phone? Is I ask for the underwriter. And when they tell me no, and they insist on answering my questions, then I pepper them with really complicated questions that only an underwriter can answer. And then I insist on them answering, which they don't. Then I say, okay, then give me a supervisor if you'll give me an underwriter. And then the supervisor gets on the phone. I say, I'd like to speak to an underwriter. He says, you can't speak to an underwriter. I say, okay, great. Here's all my questions. They're like, I can't answer those. I'm like, yeah, I know. That's why I want to talk to an underwriter. And eventually they get me to an underwriter. And that's how I do it, is just peppering with very complicated questions. And what I found with that underwriter, she goes, look, here's the deal. There's something, this showed up on your LexisNexis credit report. That's why you got denied. And actually, she was awesome. She goes, get that removed from LexisNexis and then come back and reapply and you should be fine. How nice is that? But two lessons from this. First of all, if you really get denied insurance policy, it makes sense to push through. If you really don't understand the reason, talk to an actual underwriter. And again, I just gave you the path to get to an underwriter. Second lesson from this, get your LexisNexis credit report. I talk about this all the time. We get our clients' LexisNexis credit report with them. We review it. We help them fix inaccuracies, because this is where insurance providers get a lot of their information that they're using for underwriting. And by the way, every insurance policy you've ever had is in your LexisNexis credit report. So this is some things to focus on. Consumer credit, commercial credit, LexisNexis. You want to focus on that because it does have a direct correlation in if you get approved in some cases or how much you'll pay. Okay. Now, again, having no business credit score is not going to prevent you from getting approved typically, and it's not going to keep you from getting a decent premium, but it will get you solid discounts. So it makes sense to have a good Paydex score, because having good established business credit will get you discounts off a normal premium. Okay, we call these compensating factors in the underwriting, in the lending world, and the insurance world works the same way, right? There are things that will raise your premium. There are things that will lower your premium. And business credit scores being good are one of the things that will lower your actual premium. Now, a lot of business owners don't know this. They don't have any idea that business credit, consumer credit, or LexisNexis even tie in to what they're going to pay with insurance. Will they get approved, et cetera? But they absolutely do. So consider personal credit for a moment. Since Experience Business Credit Score in part does sometimes include business and consumer credit, well, then, that can, their blended scores can have an adverse effect if you've got damage to either one of those, right? So again, and this isn't because they're being mean to you. It's just statistically, people with lower credit scores have more accidents. They have more problems. They have more claims. There's more issues there. And that's why lenders, issuers, credit issuers, insurance providers put so much weight into these kind of things like LexisNexis, consumer commercial credit scores as well. So business insurance rate are based on a narrow set of information on your credit report. So for example, you want to make sure that you get an idea of the kind of stuff they're looking for. So there's an insurance credit score, for example. The insurance credit score does not include your FICO score. And this is what happened with me, is that my LexisNexis insurance credit score was lower than what their actual would allow me to get approved. And then I had to go look it up. And so this is what happened to me is I got on the phone with an underwriter, and the underwriter says, hey, here's the deal. Your LexisNexis credit score insurance credit score is too low. And I get up and off the phone, I go, okay, I never knew there was a LexisNexis insurance credit score. I never even knew that before. Now, I do understand what are called FICO scorecards, and a lot of people don't. So a scorecard is an industry-specific scoring model that is used by industries like mortgages or cars, right? So let me just give you an example of how the system works. And this is something most people that are in consumer credit repair, that are credit gurus and experts, have no idea about. Okay, and it's always how and this is just a basic way I gauge somebody's knowledge about credit. I run into a lot of people, and being, best-selling book in the consumer and commercial credit space, I run into a lot of people that know credit. They know who I am. As a matter of fact, literally this just happened this weekend. We're doing lunch tomorrow. Ran into a guy, group of friends. He goes, yeah, I follow you on Instagram. He goes, business credit. Yeah, I'm like, yeah, Credit Suite. And he says, yeah, I'm in consumer credit. Great. One of the very first questions I always ask or throw in is I ask him about scorecards. Because somebody that really knows credit knows scorecards. Most people in the industry, 90%, they don't even know what scorecards are. And that's an indicator to me that there's somebody that's in the industry that's not really proficiently knowledgeable about the industry. So what scorecards are is every industry has, the major industries have one. There's like 16 plus of these scorecards. So for an example, there's something called a mortgage industry option. And the mortgage industry option and the auto industry option are scorecards specifically for the mortgage and auto industry. So a mortgage auto industry option scores mortgage history or heavier, or weighs mortgage history heavier into the weight of the overall score than anything else. So I have a credit report. I have 10 items on the credit report. 2 of them are mortgages. The mortgage industry scoring model is going to take those mortgages and weigh them heavier into the score and then give the mortgage broker a very unique score that gets that person a score based on the risk of them defaulting on a mortgage. Same thing for auto loans. Auto industry scoring option will look at your previous auto loans and score those heavier into the weight of the overall score than anything else. So what this means is it means I could have a 650 FICO score when I go look at FICO.com, but when I then go to get a car loan, they could pull a 700. They could pull a 600. Depends on what my auto history is. So if my history of my credit report's been really good on everything, but I had some late payments on a car loan 2 years ago, then I had a repossession 5 years ago, then my auto score is going to be way lower than my regular FICO score. Okay, vice versa. If I had some late payments on credit cards, but my auto loan history is flawless for years, then the score they'll pull at auto dealers is going to be higher. So these scorecards, insurance agents have, the industries have them too, and they have an insurance score based on the scorecard. Well, again, that can get you denied, as it did for me. It got me denied, and then I had to research. I'm like, what is calculated into LexisNexis insurance score? And then understanding what was used to calculate into their score, I was able to get LexisNexis, clean up a couple things, then fix it. Score went up, never saw the score, but I knew enough to go back, reapply, and get approved. So these are perfect examples. This is a case of a real denial based on a credit report and score that I didn't even know it was secret till I figured it out. I figured it out because I pushed through to talk to an actual underwriter that really would give me the facts, not some front-facing person that had no clue. Then they said, oh, you're turned down because of this score. I'm like, wow, didn't even know that score existed. Now I can go online, research what's in the score, go, got it, go back, fix the negatives that I would need to fix, get the score up, reapply, get approved. So this is an example of a denial to an approval by understanding how credit scores affect your ability to actually get insurance. Okay, so again, there are things that are calculated in there, and a lot of things are different based on the actual insurance scores that lenders have. And are they pulling LexisNexis? Are they pulling FICO? It's all calculated difference based on the actual scores that you actually use. So only some items on your business credit report are considered when applying for business insurance. Okay, so the insurance score exists specifically for insurance purposes. And again, it only looks at certain areas of your business, including the industry that you're in. So some of the items your business insurance company will look at are number of business credit cards you have or trade lines, number of outstanding loans and other debt, the average time in which your company pays its bills, collection activity, if any, length of time that you've had credit. So these are some items that insurance companies are specifically looking at on your reports as well as your actual score. So what do we do here? Well, we got to get accounts that report to the reporting agencies. Then we got to pay them on time. If we do that, then that gives us the business credit cards that they're looking for. It gives us outstanding loans and other debt. Not a lot of it, but we've got revolving credit there. We've got pay our bills on time. We don't have collections. So this is a lot of what those lenders and credit issuers are looking for. And Angelique, thanks for coming in from Michigan, saying, oh, brilliant. Davis, Unbound Business Solutions out of Tucson, Arizona's in the house. Thanks for saying, oh, Columbia, South Carolina is in the house. Shandi, thanks for saying, oh, hey, tell me where you're from. Always like giving you a shout out. And in our chat, our team is dropping links to a lot of the things that we're talking about too. Okay, items that insurance companies cannot use is the amount of credit available, number of credit inquiries, the type of credit history you have, okay, and not having enough credit, types or insurers of credit cards and debit cards and business carriers. So these are things that are not looked at or not taken into consideration by insurance companies. So now we see what they are looking for, and we see what they're not looking for. Now, keep in mind, this is just for business insurance that we're talking about here, okay? So does it matter so much that you don't think you need a lot of insurance? Well, yeah, it matters because you can't get by with no business insurance. Every business needs it. So to give you an example of how important this is, right? I own every asset I own, and let's just take my car. My car is owned in an LLC by itself. The LLC only owns one asset. The asset is the vehicle. and then I have an umbrella insurance policy on that actual business. So I am not an attorney. I'm not an accountant. This is not legal. It's not accounting advice. But I'm just telling you personally how I handle things so you can get an example of how this works. So I have an LLC. The LLC holds my car. The only thing the LLC has is my car. Now, let's say I'm driving my car. Let's say my car is on Turo rented and somebody crashes, and let's say they're drunk and they kill somebody. Let's say that's what happens, right? Put my car on Turo, somebody rents it on Turo, they go get drunk, they drive, they kill somebody. Really bad situation. Now, that person that gets killed, their family is going to sue everybody. They're going to sue the manufacturer of the car. They're going to sue my insurance company. They're going to sue Turo. They're going to sue Turo's insurance company. They're going to sue everybody they can sue. But here's the interesting thing. The car isn't in my name. I don't own the car. The LLC owns the car. So and I'm not saying that they can't come after me, but I'm saying I've created a level of separation between me and them. If they come and sue the owner of the car, they're suing my LLC, not me. And my LLC, limited liability company, right? Limited liability means that like it limits my liability. There's an extra layer of protection there. And then the company itself has an insurance policy, which is pretty hefty. So they're going to want to go after and get the insurance from the company. And that I'm fine with that. That insurance is stupid cheap to get. And the insurance is there to give them a carrot to chase after so they leave me alone, right? They're not going to try to go down the rabbit hole and somehow get around the LLC and the protections the LLC get to me, because the company, the LLC, has a massive insurance policy that they're more likely to pursue and better to pursue than try to break the veil of the LLC and try to get to me. So again, I'm not an accountant, not an attorney, not legal accounting advice. I'm just saying, you see how this works? And every asset I own is that way. Anything that I own of any value, it's in a separate LLC. So if anything ever goes wrong, they come after the LLC, not me, and the LLC has separate insurance. So they have, and they can get the insurance that covers the LLC. And again, they're not trying to come after my personal insurance. They're not trying to come after my personal assets as a result of that. So that's just an example. That's not even a business. That's just how I own my assets. And the business has many different types of insurance as well. Air and emissions insurance. There's insurance for key man insurance. There's insurance of, natural disaster takes place. One of my good friends, her entire business was wiped out by a hurricane. She owned like a medical transport business, and a hurricane came through and destroyed all the vehicles in the entire business. She had insurance. The insurance paid so much, and she said, I don't want to start the business again. So what she did was take the insurance money, bought property with it, and now literally is retired in her 30s and just lives off the rents of all of these free and clear properties. And by the way, real estate since skyrocketed in Florida. And as a result, that is now worth, the properties are now worth 4 or 5 times what she originally paid. But she had insurance. It's what created that whole path. And somebody else that didn't have insurance would have their entire business wiped out, and there was nothing they could do. They just had to start over. She had insurance, business gets wiped out. Insurance basically helps her create a real estate empire that now has her retired in her 30s. So I can go on and on and on, but you've got to have these insurance policies, and they are so stupid cheap to have. They're really, really affordable. It just doesn't make sense for you to not have them, okay? Now, different industries are going to have different elements of risk. And again, this is why I tell everybody, you've got to go to naics.com. You have to make sure you understand your real industry. Okay, somebody asked me yesterday on my live stream, they said, hey, the exact question was, what NAICS code is for transportation? And I said, great question. Let me explain to you now why this is the problem. And we pulled up the transportation NAICS, and under it, there were 100 subcategories, 100. And I said, this is an example. You say you're in transportation, but you've got it all wrong. And when somebody puts in transportation as an NAICS code, 100 options come up. And if you're not telling them which of the 100 you are, then they're choosing for you, and they're always going to choose high risk. So you need to understand what your NAICS code is, what your exact industry, sub-industry is. And here, I'll show you exactly what I mean by that. Because if you don't get this right, then you have problems with insurance, you have problems with getting loans, credit lines, your credit scores are all judging you based on being an industry or not. So let's look at this. For example, hey, I'm in the transportation industry. What NAICS code am I? Look at all of the NAICS codes under transportation. Look at all of these. We counted them. I counted like 80 something, and then I said, I'm done counting. I'm not even going to count anymore because there was like 80 something plus, and I just quit counting. So what you should do is you should make sure your taxes, the credit bureaus, loan applications, credit applications, insurance says, hey, I am in the general freight trucking is my industry in the NAICS 4841. If I'm filling out an insurance policy, it's literally going to say, what's your industry? I'm in general freight trucking, parentheses, NAICS 4841 in parentheses. This tells them exactly what industry I'm in. If I just said I was in transportation, they wouldn't know which of these I was in. So you got to know this because your insurance rates are based on what industry you're in. And if you have this wrong, then you're going to pay higher premiums based on risk of an industry that you're not even in. So general liability insurance, every business needs this. It covers third-party bodily injury, third-party property damage, advertising injury like acquisitions of libel, slander, copyright infringement, etc. The type of your business, its size, assets, corporate structure determines the amount of coverage you're going to need. So if you're asking what kind of insurance do I need? General liability. Let's start here. This is an example of one that you really need. And it's not going to cover motor vehicles. Now, commercial property insurance, right? If you have a physical address, well, you got to get insurance, like homeowners insurance. And basically, this covers damage to the structure, inventory, property within the actual building itself, damage from storms, fire, theft, vandalism, right? So again, this is something that you very well may need. You need it. If you have any kind of commercial building, this is important as having as homeowners insurance is if you have an actual home. So insurance companies will sometimes offer a BOP to small and medium-sized businesses. A BOP policy will usually combine general liability, property insurance, and business interruption coverage, which is if like there's an interruption to your business. Like, so for example, business interruption insurance in some cases would cover you for COVID. For an example, you have business interruption insurance, COVID hits, all of a sudden your business is shut down. If there wasn't a clause in there that said that was an exclusionary thing, then all of a sudden you have coverage to cover you for those months that your business is down. But this is exactly why you've got to look at the print of what they're excluding, of what's not covered. If they come in and say, hey, all natural disasters, but any kind of viruses are, well, we wouldn't think about that. Wouldn't even be an issue 5 years ago. But now we're like, oh my gosh, like all these businesses got interrupted because of a virus. So you wouldn't want that to be excluded. So you've got to look at that exclusionary language to make sure that things that are even slightly possible to happen are not excluded. So, for example, flood insurance is one of those things, flooding. So that's common in Florida because we're at sea level. So again, a lot of people that are inland Florida might say, hey, I'm not really at risk of flooding, so I don't care if they exclude that. But then all of again, we have heavy storms, and then that property does get flooded, and now they're not covered because they had an exclusion there that said that they were. So you got to really look at those, and you also got to keep in mind that things like business interruption insurance, general liability insurance, property coverage, all of this stuff could be put into one policy by a lot of providers as well. Speaking of business interruption insurance, right? This is if the property sustains damage, needs repair. You may not be able to keep your business open. If you can't stay open, well, then you got to have business interruption insurance, right? It can cover your employee payroll, your taxes, your operating expenses, your debt repayment, sometimes the cost of a temporary location. So many business owners use this during COVID. Pandemic, as we talked about, this is what pulled them through. But imagine being a restaurant owner and not having this. Don't get me wrong. And somebody said that to me. They're like, hey, I said this the other day. I said, dude, restaurants really took it hard because they were shut down immediately overnight, sometimes for months or even the course of a year. And then somebody said, yeah, but they got bailed out with government money. I'm like, yeah, but that took a while. Like the actual the rescue plans from the government for restaurants took like a year to really come into play. So most people can't operate their business for a year without income. This is exactly what business interruption insurance helps prevent. So when you have that unexpected things like COVID, you at least have some protection. But workers' comp insurance, if you hire employees to work in your business, you're legally required in most states to get workers' comp insurance. And it basically protects you and your employees if they're injured or ill at work. So it can cover an employee's medical expenses, lost wages while they're recuperating. And if an employee agrees to accept workers' comp as part of their hiring package, they often waive the right to sue you for an incident at work, right? And this is what we worry about, especially in a lot of industries like over-the-road trucking. I don't know about you, but I've seen a show called Ice Road Truckers. I love this show. It's like one of my favorite shows back in the day. And these guys, they're crazy. They drive these 18 wheelers up in like Alaska and Canada and the insane, ridiculous weather where I swear, no exaggeration, they're driving them over lakes. They wait until the lakes freeze, then drive their trucks over the lakes. And I mean, half of the show is these guys broke down in tundras in the middle of nowhere and below sub-zero conditions, right? So really high risk of injury in these kind of situations. So I give you an extreme case because certain industries are more prone to risk than others. Like business credit, not prone to risk. Like our employees, not big chance of risk, especially since we're all working from home. We don't even have offices where people could fall and hurt themselves and do these kind of things. But if you're in the transportation industry, much higher risk of potentially bad things happening. Commercial auto insurance, obviously just what it sounds like. It actually is insurance that's used to cover commercial vehicles. Very big if you're in areas that need box trucks and cranes and 18-wheel trucks and et cetera. But again, a lot of people get insurance with vehicles and use business credit to do that as well. So this could be very applicable to being able to make sure that you have the vehicles covered in your business as well. And Tristan Lee Harris says, hello from Columbus, Ohio, starting a logistics company, and we'll be calling you later this afternoon. I'm looking forward to talking to you as well. As a matter of fact, we're talking about a little bit of logistics and trucking and everything right now as well. So it's good timing. So product liability insurance. So if you manufacture or sell any type of product, you can be held liable if that product injures somebody, right? So product liability can help to cover the associated medical costs, replacement of purchased product, even legal fees and settlement costs if your business is sued because you have a product that actually hurt somebody. So this is something you really should have if you sell any kind of product. Cyber liability insurance. If your business is subject to a data breach, the customer information was accessed or stolen, cyber liability insurance can notify anybody impacted, give them credit monitoring, cover the cost of informing the public if necessary. And some insurers call this data breach insurance. But again, anybody that's storing information, especially sensitive information for clients, should really consider having this kind of insurance as well. Professional liability insurance. If your business run a business where you're offer professional advice or responsible for completing projects such as a doctor, lawyer, or architect, then you need to carry this kind of insurance. It's also called E&O. We talked about this, air and emissions insurance. And it basically protects if your business is like accused of negligence, missed deadlines, undelivered services, breach of non-disclosure, copyright, et cetera. So again, I've explained this. I've had affiliates that we worked with that wouldn't even do business with us if we didn't have this kind of insurance because they wanted to make sure that we have the insurance coverage if like anything happens. And these are very practical things that can happen. So doctors, other professionals have to carry this, like malpractice insurance, but even plumbers, realtors, event planners, they all can use this as well if things go wrong. So look at event planners, right? Event planners plan these massive events and COVID hit, shutting everything down. So being able to have this kind of insurance, professional liability insurance, gives you some kind of coverage in those situations. We talked about this today as well, commercial umbrella insurance. Okay, it's often more affordable to purchase this than some of these other specific kind of insurance. Okay, an umbrella policy basically covers business risks that an underlying policy sometimes excludes. Hence, the policy limits of your general liability policies are exhausted. Well, then this covers you. So an umbrella policy is just kind of a general overreaching policy. So again, my cars are also owned in my LLC, in a separate LLC. But the car is insured, right? I have insurance on the car. Then I have an umbrella policy above that, like as an umbrella over the actual business itself. So, somebody's driving the car and the person, somebody, they kill somebody. Well, then unfortunately in that circumstance, I've got car insurance that helps me. And then the LLC that owns the car has an umbrella policy. So it just gives me this extra layer of insurance, and it may cover in cases the other one doesn't. So let's say the car's rented on Turo and my insurance provider from State Farm says, we're not going to cover the car because it was like you had it rented through Turo, and that's an exclusionary thing in our policy. Well, then I at least have some protection from the actual umbrella insurance policy. So it just kind of gives me extra protection when the other specific insurance I have sometimes doesn't help. Do you have a home-based business? Well, then that obviously means you should have a homeowner's insurance policy. You're more than likely to get hurt if you own a home. And if you work in the home, you're definitely more than likely to get injured in the home. And the same thing with renter's insurance. If you rent a home and don't own it, renter's insurance is ridiculously cheap if anything happens in the building. And I've got friends that literally had a flood where 3-4 floors, all the units in 3-4 floors of their buildings were adversely affected. And people that didn't have renter's insurance, it was a serious problem. So if you work from home, whether you rent or own the home, you need to consider those types of insurance as well. Okay. Also, let's keep in mind key person insurance. This means that, if you're the key operation of the business, well, the business isn't going to run to a halt if something happens to you. Okay. This is an ongoing joke with my business partner and COO, Megan, right? Is that because of this, we have key person insurance on each of us. And as the business grows, the cost to replace somebody like us grows too, right? Like if I just start a business, the cost to replace me isn't a lot of money. But if I build the business to 5 million, 10 million, 20, 50 million, well, you're going to have to bring in a high-end CEO, which could potentially cost $500,000 a year to replace me. So you got to have insurance. I mean, if you had $1 million worth of insurance, that would only cover the salary for 2 years of this new person to come in. So you have to be able to have that key man insurance. Now, I joke around with Megan on this all the time. As the business grows, the insurance goes up. And I tell her, I said, look, you now literally have more benefit for me to die than anybody else in my life. And this is always an ongoing joke that I tell people in the company. I said, if anything ever happens to me, like, you need to look at her. It's a joke that I put out there between us. Maybe it's not funny, but again, it comes down to the fact that as the business grows, this key person insurance has to grow with it, because the cost to replace one of us is pretty substantial to the organization as well. Two other kinds of insurance are commercial crime insurance and equipment breakdown coverage. So crime insurance can protect your business if you're robbed, okay? And if you can help cover financial losses from other types of insurance can. And equipment breakdown covers the loss of your AC system, boilers, furnaces, other things where it can break down. This happens especially in industries like heavy equipment businesses where they need heavy equipment to be able to operate, right? So if you've got employees, you may be thinking about offering employee benefits, depending on the size of your company, health insurance, other kind of insurance, life insurance. This kind of stuff is possible for your employees as well. And again, good business credit is going to get you discounts on this. And finally, revisit your insurance policy. There's all kinds of training online on how to do this. We got a podcast being released in the next month or two that has this covered as well. You need to look at the details of those policies. You need to look at them regularly. You need to especially look at what's excluded. There's a lot of stuff about what's covered, but I'm not an insurance agent, not an attorney, not an accountant. This isn't legal to insurance, advice. Got to say that for FTC disclosures. But the reality is that look at the exclusionary language. What's excluded is really the stuff you got to be very cautious of and what you got to look out for. So keep in mind, having good business credit helps get you lower premiums on all these kind of insurance. Keep in mind a lot of different insurance that you could possibly get. You might be thinking this is all going to be very expensive. You might not need all of this. Just go talk to an insurance agent as we started that you can know, like, and trust, and then have them guide you. Like our insurance agent that, again, helped me in the very beginning get my car insurance and then life insurance, and then homeowners insurance, as I grew in my personal life, also helped us with every aspect of business insurance that we've had. They've helped guide us on the kind of insurance that we need and not. And that's what you want to do, is find somebody that you can really work with, that you trust. Now, next time we meet, we're going to talk about finding your side hustle and how to get funding for side hustles. Did you know there are certain funders that just give you money, like 10 grand, just to launch a side hustle business? Yeah, they do. And we're going to talk about that next time. Matter of fact, if you need help getting financed, give us a call. We never charge you a dime to get loans and credit lines. And you can do that at 877-600-2487. On a call with us, we do a free finance assessment. We do a fundability check, help you get your fundability in line to have a better chance of getting credit financing and insurance. We also come in and help you with building your business credit. And we also come in and tell you all the financing you can qualify for now. And if you have any interest at all of actually offering business credit financing as a service, well, then you really want to go to businessloanbrokerchallenge.com. That's businessloanbrokerchallenge.com. If you go to businessloanbrokerchallenge.com, you can register for free for our challenge. It starts March 21st. It costs you $0. And this is going to be a week of free training where we bring in all the industry experts, the gurus, to help you get set up with lenders, help you set up your branding, help you launch the business, help you understand how to process deals, how you market, how you advertise, how you get customers, how you convert those customers into sales. Every aspect of launching and scaling a business loan brokerage company, we're going to be talking about during this. If you want to be a business loan broker, a partner, if you want to be somebody that offers business credit financing, make sure you go to register at businessloanbrokerchallenge.com. And also don't forget to follow us on all of our social channels at creditsuite.com at the top right of the page. So I'm going to go ahead and wrap up. And Lameka said, what about consultants and coaches? We already talked about that. That was professional. Let me go back to tell you the exact kind of insurance that was. Professional liability insurance. So right here, professional liability insurance is what you are going to be looking for, Lameka. You're going to be looking for professional liability insurance. That's what you're going to want as an actual consultant. So make sure that you look into that as well. And Nestor says, great information. I appreciate that, Nestor. Okay, so so I'm going to go ahead and wrap up. If you have any other questions, please reach out to us. Let us know. Don't forget about your free finance assessment. Don't forget about Business Loan Broker Challenge taking place March 21st, and that's 100% free to be part of. So all you have to do is go to businessloanbrokerchallenge.com. Thanks for tuning in. Have a great day. And don't forget to give us a call for your free finance assessment. And don't forget to go to businessloanbrokerchallenge.com to register. And I look forward to seeing you on the challenge and our next training where we talk about how to basically be able to get financing for gig businesses and for side hustles as well. Thanks for tuning in. Have a great day.